We've climbed out of our great economic crisis. It's beginning to work for working people. This nation is very rich. We have, and who have benefited the most has been the very rich, though, not everybody. And that's not how it should be.
I don't know what he's talking about. Honestly, I don't know what he's talking about. It was almost incoherent. Benefiting the rich, climbing out. What are we climbing out from? He was handed a roaring economy with no inflation on a silver platter. Anyway, joining me now to talk about this and a few other subjects. Stock market did very well today. Whatever was up, almost 350 points. We have David Bahnsen, managing partner of the Bahnsen Group and author of There's No Free Lunch, and E.J. Antoni, right? Antoni.
Got it.
Public finance economist at the Heritage Foundation. Gentlemen, welcome. EJ, what's he talking about? I mean, huh? Really? What did we climb out of? He climbed out of a 6.5% growth rate in the first quarter of 2021 and a 1.5% or less inflation rate, and he's proceeded to decimate high inflation. Now that's coming back down, although maybe the wrong direction. I'm just saying, what is he talking about?
Well, Larry, your guess is as good as mine. Who's benefiting? The donor class and no one else. I mean, it's amazing how this president, who says that he is for the little guy, that he doesn't want to raise taxes on those earning less than $400,000 a year. It's about building from the, what is it, the middle out and bottom up?
Something bottom up. The middle's going down and the bottom's going down.
Exactly. In fact, the lowest two income quartiles, the bottom half of earners, are doing terrible. Their real wages have fallen under this president.
David Bahnsen, you have anything to add to that or any disagreement? Because, I mean, I think Bidenomics is a failure. Here's my point. You can look at a million pieces of data, or you can look at something of GDP. GDP is something that doesn't really affect ordinary people, okay? What's killing him in the polls and in the economy is the affordability failure. Affordability continues to decline.
That's right.
You're working harder and buying less with your money. And, you know, maybe oil now or food, and people can exclude that from these indexes, but that's what people use.
I used to say that the stock market was the best indicator of whether or not a person would get reelected or the incumbent party would. And I did a study, and it's been like 93% of the time for 100 years. Real income, real wages is 100% of the time. Mm-hmm. And I think that's the biggest factor. If prices were higher and wages were higher than that, it wouldn't matter as much. But to your point, it's the bottom deciles of wage earners, which were going up in the prior administration. The real wages were going higher.
Yeah.
And I think that the biggest issue to me is, see, sometimes I think presidents get blamed they don't deserve. Bad circumstances, bad timing, macro, geopolitical. In this case, energy is the problem I have. I think he could have done something about it, and he didn't. He did the opposite. He could have continued energy independence prior administration. He chose to go the other direction. It doesn't hurt people like me that much. It hurts bottom earners a lot.
I think we were looking at this. Not only did Trump hand him a 6.5% growth rate and less than 1.5% inflation rate, I believe it was about a $50 oil, and it was about $2.30 at the pump. Now, that's the stuff that people use, and food prices, you know, commensurately low. Food is not unrelated to energy. Food is very much related to energy because of fertilizers. I mean, we've learned that the hard way. So this is stuff where they failed. Now, talk a minute about the stock market, which, all right, today you had higher than expected PPI, softer than expected retail sales, particularly after revisions. Yesterday you had higher than expected CPI. E.J. Antoni, what does all that mean in your judgment?
I think that inflation is showing that this economy is nowhere near as good as the headline numbers are indicating. In other words, as soon as you adjust for prices, things are not looking that good at all. And I think the retail inventories report that came out this morning was a perfect example of that. On paper, it's a record high. Things look great. But once you adjust for prices, you find that those inventories are only bigger in nominal terms. In real terms, it's the same level as in August of last year and the same level as October of 2019. So things are not by any means doing well.
David, come back on the stock market. Very bad last year, recovering this year, a little jumpy. I mean, today was a good day. I'm told it was a IPO for a chip maker that was driving stocks up over 300 points. What is your assessment about the stock market? How do you see it?
I think that the S&P, which is tech heavy, 7 companies driving most of the returns, the NASDAQ, which is essentially all tech, are very frothy, very rich, high valuation, hard to see how valuations move higher. Earnings growth might be flat year over year. It's not going to be up much. But in fairness, it wasn't down nearly as much as many had predicted. Year over year, it was down 4 or 5%. That's not recessionary. People thought it'd be down 15, 20%. However, companies have gotten better. Their margins are good. The Dow is a better diversified look at the whole economy and corporate profits.
Are profits, are multiples too expensive?
In the S&P, yes.
I think 20 times in the S&P.
20 in the
that's a little
S&P
pricey.
and really high with big tech.
Yeah,
really
yeah,
high.
yeah.
And so when you look at consumer staples, utilities, more boring companies that I like as a very boring person, they're not so expensive. They're a little more realistic. But I want to say something, Larry, about your point. You inherited this economy. On real wages, Joe Biden said something fascinating a number of months ago. He said, since COVID began, real income is higher. Real wages are higher. He took office a year later. Why would a politician ever pick a date that has nothing to do with their term in office? It's true, real wages are higher since 2019, but that he wasn't president for 2 of those 4 years.
Actually, though, we just saw the latest income numbers. Real incomes, or median families, adjusted for inflation, are about $4,000 lower than the pre-pandemic peak under Trump. That's a big number.
That's right, pre-pandemic peak.
That's the Kevin Hassett, Tyler Goodbody, Larry Kudlow corporate tax cuts. I mean, we always argued that middle income people and lower income people would be the biggest beneficiaries of the corporate tax cuts, because more profitable companies after tax are going to have more money for wages and more money to hire, and all the dopes on the left do not understand that because they hate profits, right? And they hate corporations anyway, and they hate capitalism, but I don't even need to put that in. And so Kevin Hassett argued it would be a $4,000 increase in real incomes, and that's exactly what happened, by the way, revised higher with the latest census report. It was 5,000. But today, with the latest numbers through 22, Biden's down $4,000 from pre-pandemic. It's not a good show. Now, Akil is trying to give us the hook, but I want to ask you, EJ, in terms of the economy itself, what is the direction? We're sort of floating in this middle ground. The recession hasn't come. The boom hasn't come. What's your take on that?
I think we're going to continue to have this stagnation for a while, and the inflation as well. So there's your recipe for stagflation. But I think as soon as that yield curve starts to normalize, that's a big indicator for not just that a recession is coming, but that it's coming very soon. And so the inverted yield curve, yes, it's a good recession indicator, but as soon as it starts to normalize, that's when we know it's right around the corner.
David, bond rates up or down? They're 4.25 on the 10-year. What do you think?
By when?
Tomorrow, the end of the year.
I don't have any short-term
A year
view.
from now.
I'm sad to say
by-election, how about that?
By-election, bond yields will be lower, and it's not just merely because inflation is coming down. It's because growth is coming down.
Yeah.
And it's because the market knows 10 years out we're not getting 4% real GDP growth. We're going to be lucky to get 2% real GDP growth because we have spent ourselves into oblivion.
I can get you to 4, buddy.
I know you could.
Get you to 4. Deregulate.
You're not on the ticket, my friend.
Deregulate liquid gold.
Yeah.
Reverse Biden's new regulations. Extend the corporate tax cuts.
More
and
production of
personal
goods
tax
and
cuts.
services. More energy.
Give entrepreneurs a break after tax, after regulation, after the central planning, and retire Joe Biden. Oops, that was politics. Long editorial. EJ Antoni, thank you. David Bahnsen, thank you. My dentist, thank you. I survived this segment.